Our topic today now is about deductible expenses for self-employed. So what can you take as expenses against your income before you calculate your tax for the self-employed? And then what tax-free employee payments can we give? So we're going to have a quick chat about the two of those during this session. First of all, what's the general rule for you being able to claim an expense? Well, the general rule, and there are some exceptions, and do you know what? When you talk about tax, there are exceptions to everything that we talk about. So we're only touching the absolute tip of the iceberg here today. So you need to look at what's happening within your business and see how the different scenarios apply. But in any case, the general rule for being able to claim a tax expense is that it's wholly and exclusively for the business's purposes. Okay, so there's no private element to it, and if there is a private element to it, we're going to talk about how you'll handle that a little bit later. So it must be in relation to developing the business, moving the business forward. That's the reason that you're able to claim an expense. So what kind of expenses can you claim? The first thing is, and a lot of people don't realise this, that you can actually claim pre-trading costs. So before your business starts, you will have a certain number of expenses, and you can actually claim these as expenses. And remember, everybody, if you are VAT registered, it's the net of VAT amount that you claim. And if you're not VAT registered, it is the full amount that you claim. So for pre-trading costs, you can imagine it's most likely that you were not VAT registered before you started to trade. And if that's the case, then you will put in the full amount of these pre-trading costs. So things like accountancy fees, advertising costs, your feasibility studies, your business plans, if you had to pay for mentoring and so on before you start to trade. All of those things are pre-trading expenses that you can claim against your first year of expense of trading income. We'll say then rent that's paid from the premises from which you're going to operate. So for example, you might not have opened your doors, but you might have to pay the rent on a place for 2 or 3 months while you're renovating or fixing it up or setting up your business. And you can still claim that within your business expenses. So a lot of people forget about those pre-trading costs. So if you're either A, setting up a business, or B, have just set up a business, make sure to go back and check on those pre-trading costs. So self-employed people can claim for the purchase of goods for resale. So if you buy anything that you're going to sell on to your customer, that's an expense that you can claim back. You can claim back the cost of having employees, including the employer's PRSI and your pension costs and so on like that. So whatever it costs you to have that employee, then that is a deductible expense for you. Now remember, we're going to talk later about the fact that employees then have to pay tax on appropriate parts of what you pay them. Some things are taxable, some things are not, and we're going to talk about later the things that are not taxable, okay? And there are lots of them, and you should consider trying to roll those into your package for your employees. But all your employees' costs, whether the employee pays tax on them or not, is irrelevant. They're still a cost to you. Okay, so employees' costs, including PRSI, employer's PRSI, pensions and so on. Rent and bills for your business premises, they are a legitimate expense. So think of it if you are a person who doesn't have a business premises. Let's say you supply a service, then I want you to consider the part of your home that you use as an office. Okay, so let's say, for example, if you have a room in your house, let's say a spare bedroom that you have converted to an office or whatnot, then you're able to claim expenses for that proportion of the house. Now again, that's not what we're doing today. Today we're just listing what they are, but you would need to talk to your accountant about that and figure out how much of my ESB bill, how much of my oil for heating can I take against the business expense. Running costs, so if you've running costs for a vehicle or a machine that you use in your business, you're entitled to your expenses to put those expenses against your income. Okay, and bear in mind, again, we're going to talk a little while later if there's a private element to that. So for example, if you use your own private car for business, if it's 50% business, 50% private, then you're only going to claim back 50% of the costs. Lease payments. So if you've made a lease, now there's a difference between a lease and a hire purchase or a loan, so just be aware of that. If you have used a lease to buy a vehicle or a machine or something for your business, you can claim back those lease payments as an expense. Accountancy fees, of course, legal fees, of course. If you had to have a surveyor in or anything like that to do with the property that you use in your business, they would all be allowable costs. Interest payments then for money that you borrowed to finance your business. Now this one is really important. Let's imagine that I borrow 12,000 euros. And let's say in the year I pay back 1,000 and I pay 1,000 euros of interest. Let's just say that's the scenario. The 1,000 that I pay back is not a business expense. It's the 1,000 that is interest that is the business expense. So if my payments in total are 2,000 and 1,000 of them is interest and 1,000 of them is paying back the capital of the loan, it's only the interest that is a business expense. The paying back the loan is not. Okay, so bear in mind, interest payments only if it is something like a loan, but if it's lease payments, it's the entire amount of the lease that you can claim back. And again, you need to double check with your accountant on that, because there are financial leases and the name of the other lease won't come to me, but basically where when you have the lease, you take over the responsibility for the item, it's one kind of a lease. Where you don't take over the responsibility for the item, it's another kind of lease, and the interest on that is charged differently. So you need to be double checking that with your accountant and taking that into account before you decide which method of finance you're going to use. So am I going to use hire purchase? Am I going to use a lease? Am I going to get a loan? All of those, the way that you can take them as a business expense is really important, and something that you should take into account with regard to how much it is actually going to cost you if you're able to take more or less of it as a taxable expense. As a self-employed person, you cannot claim for clothing unless it's protective clothing. Okay, so let's say, for example, if you're the manager at a hotel, you cannot claim for your lovely suits and your nice ties and things like that. You can't claim for that. Okay, it's only protective clothing that you can claim for. Your own pay, if you're self-employed, that's not an expense, it's drawings. Okay, business entertainment and expenses you can't claim for. You can't claim for your own food or travel expenses. Now, this one is a little bit difficult, because if you take your own food and travel expenses, what we're talking about here is traveling from home to work. Okay, that's a travel expense that you can't claim. So this is your personal travel. But let's say I've arrived to work and now I've got to go out to a customer. Yes, I am still traveling, but I can claim that because that's a business expense. Traveling to and from work is not a business expense for the self-employed. So again, you would look at that. What part of my travel, let's say in my private car, what part of that is business and what part of that is private? And you would claim the business portion and you would not claim the private portion. And you can't claim capital expenditure. So if I buy a new van, if I buy a new machine, I can't claim that as a taxable expense. So you need, if you have bought a large item that you're going to use over a number of periods, you need to look into depreciation and capital allowances. And again, that's not what we're going to do today, but I'm just advising you that if you've bought something, so let's say I buy a new printer, and the new printer is all bells and whistles and it costs me 4,000 or 5,000. I cannot claim that 4,000 or 5,000 in that particular year. I have to look at depreciation and capital allowances instead. If it's a mix of business and private, which will often be the case, if you spend money on something that's both for business and private, you can claim back a deduction for part of the expense. Now, come on, common sense tells you that. You can't claim a private expense against your business. So things like phone bills, motor expenses, rent, and so on, you would work out the proportion of that was business, the proportion of it that was private, and you would then decide on what that percentage was going to be. For example, if you have an office and let's say it costs you 1200, pardon me, a year for heating, okay? So 12,000 a year, pardon me, not 12,000, you'd want some premises for 12,000. If it was costing you 1,200 a year for heating and 1/10 of your home was the area of your office, then you would take 1/10 of that. So you would take €120 as the heating cost for just your office in that particular year. Now you have to work out how much expenditure. You have to decide what makes common sense as to why you would choose that proportion. So if it's 10%, why have I chosen 10%? If it's 15, 20, why have I chose 15 or 20%? And you have to be able to justify that if you need to revenue, should they ask you how you came to this conclusion. Okay, so that's if it's a mix of business and private. Okay, we're just going to move on now to employee payments. Now, before we move on to tax-free employee payments, I want to talk to you briefly about benefit in kind. So a benefit in kind is any non-cash benefit of monetary value that you provide for your employee. So let's say you might give them a gym membership, you might give them the use of a car. So a benefit in kind is any non-cash benefit that does have a monetary value that you give to your employee. If that's the case, you have to add that benefit in kind to that person's wages or salary, and you've got to deduct PAYE, PRSI and USC from your employee's pay on the value of that benefit. And that's really, really important. That is your responsibility to recognise that you have given them a benefit in kind, and it's your responsibility through payroll to deduct the PAYE, PRSI and USC. Okay? Ultimately, it is the employee who is responsible to pay it, but it's up to you to make sure that you run it through payroll. Okay? So what we're talking about now are entirely tax-free. What we're going to talk about next are payments that you can make to your employees that are not benefits in kind. All right, so I'm going to look at tax-free staff payments. Really important that you remember you are not a staff member when you are self-employed. The rules that we're going to look at here don't apply to you if you're self-employed. You are not an employee of yourself. If you're self-employed, not through a company now, if you're self-employed, if you're a sole trader, you are not an employee, and that means that these things don't apply to you. Most likely, you would be claiming an expense, as we saw in our previous few slides, for the expenses that it costs you to travel, to park your car, and so on and so forth. Okay, so let's have a look. Tax-free staff payments. You can provide accommodation where the job requires the employee to live on the premises. So for example, if for security reasons the employee had to live on the premises, then you would be able to provide accommodation free for that employee. You have the cycle to work scheme. Basically what that means is that the employer can buy the bicycle for a person, and then that person can pay back the employer. They take off the payments that they make before they pay tax, and that makes it tax-free. Okay, so the employer buys the bike, the employee pays it back, but they deduct the payment of the cycle from their payroll before they apply tax. So it makes it tax-free. Canteens and meals that are free or subsidised where they're provided to everybody, and we'll have another quick look at that shortly. Car parking Now, there are issues there around that car parking, and I think we need to come back to that one, but we'll just leave it in there for the moment. Course or exam fees, where either the course is necessary for your duties, so the employee's duties, or directly related to increasing the effectiveness of the performance of the employee. Okay, so if the employee is going to be able to do their job better, or indeed it's necessary because maybe a change in legislation or a change in regulation in your sector, then that can be free and it can be paid for by the employer and it can be tax-free. Any employer's contribution towards a revenue approved scheme, now there are limits to that. Exam awards, so if you as an employee, and all of these, I'm looking at these from the viewpoint of the employee, if you get a qualification that's relevant to your duties, then you can be given an examination award. And that means that that has to be like the reasonable reimbursement of your likely expenses in getting the qualification. But that could be quite a big award. So let's say, for example, if you were doing something over a 2-year period and you were to get your award, but when you were going to your course, you had to stay with accommodation, travel, and so on and so forth, that could be quite a hefty examination award. And as long as you can show that it's a reasonable reimbursement of the expenses that it cost you to get that qualification, it would be tax-free. Entry visas and work permits, if employers pay for that, it's tax-free. If you need equipment to do your job, so your phone or a laptop or something like that, where the private use is incidental, that's also tax-free. Long service awards, so you can get a long service award tax-free, provided that your service is at least 20 years. It's not money, okay? So it's a physical gift, okay? So not money, not vouchers, not shares, not bonds, and so on. And that the cost of the award doesn't exceed €50 for each year of service. So if, let's say, your minimum is 20 years, so this gift, this long service award, would have to be a physical item with a value of no more than €1,000, being 20 years by €50 per year. Okay, so that's that would be tax-free. That's a long service award. Medical checkup. So if your employer wants you to have a medical checkup, it's up to them to pay for that, and that would be tax-free. Security assets or services, we won't go into that in too much detail, but there is some detail around that there. And basically that would be where you are at threat. You are personally at threat or in danger because of the work that you do, then security assets and services are free. Every year there is a small benefit worth €500. Now, it's €500 or less. It can't be in cash, so it could be vouchers or whatnot, and it can only be given once a year. So you can't give a small benefit of 250 in January and another 250 in June. You can give 500 in January and it will be tax-free. But if you give 200 in January, that will be tax-free, but the 250 in June will not be tax-free. And also you can pay for subscriptions to a professional body where the membership of that body is a requirement of the job. So for example, if you were an ACCA accountant and someone wanted to pay your subscriptions to ACCA and you were an accountant, that would be perfectly legitimate. However, let us say if you just happened to be an ACCA accountant, but you were working in quality assurance, then being an ACCA accountant isn't necessarily a requirement of your job. And then travel passes, similar to the Bike to Work scheme, travel passes can be tax-free. There's also a thing called an e-working allowance. And I think, guys, if you have someone working either remotely or from home or whatever, you might want to look into this one. But e-working is where the employee works at home on a full or part-time basis, or they work part of the time at home and the remainder in the normal place of work. E-working, what is e-working? It involves logging into work computer remotely, or sending and receiving emails and data, or developing ideas, products and services remotely. And what you can do here is you can pay $3.20 a day to that e-working employee, and there's no tax, PRSI or universal social charge on that. So $3.20 a day you can pay because that person uses their own, let's say their own phone for checking in on emails and texts and all of that sort of thing. So that's something worth looking at because, I mean, if you take a 30-day month, that's almost €100. Again, at least it's a 20-day month if you just look at the working days in the month. So you're looking at 60 odd euros there, 64, 65 euros tax-free each month. So definitely something worth looking at there. I wanted to just come back to the idea of staff canteen. So you can provide free or subsidised meals in a staff canteen for all employees. Now, it has to be made available to everybody, okay? And if that's the case, then that's not a benefit in kind. It doesn't include where you allow a third-party restaurant or cafe or a similar establishment to act in lieu of a staff canteen. Okay, so it has to be a staff canteen. It can't be out in a different restaurant. It has to be available to everybody. If it's not available to everybody, then it's a benefit in kind. So if the canteen is only available to certain employees, then the meals that you provide are a taxable benefit. And meal vouchers are also a taxable benefit in kind. Okay, so that brings us through the main expenses that you can take if you're self-employed, expenses that you can take against your income before you calculate your tax. And there are undoubtedly many, many more, but I just want you to make sure that you're claiming at least all of those basic ones. And then if you have employees, or if you are an employee, what are the tax-free benefits that you can get along with your salary or your wages? I hope you found that helpful, and we'll wrap it up there on that topic.